Hi traders, welcome to our weekly top-down analysis. So I give out weekly setups for volatility indices. So I only trade 3 volatility indices. So stay tuned for the trading setups. So for this episode, we are beginning our analysis with volatility 101S. And as always, we begin analyzing from the weekly time frame. So firstly, you need to minimize your chart as you can see, and then you mark your key levels. So as you can see, price is pushing down from that supply zone, and then down here we have a demand zone. Therefore, our buyers is very clear from the weekly time frame. We are going to be looking for selling opportunities from this supply zone, until this demand zone. Heading over to the daily time frame. So from the daily time frame, we have a break of structure here, which is the general break of structure. We have a break of structure. And then we have this internal break of structure right there. So we have an internal break of structure, and then we always target the order block, which caused the internal break of structure. So in this case, it is that order block right there from the daily time frame. And then we also have this minor support that price is reacting from. And then that's pretty much it from the daily time frame. Heading over to the 4 hours time frame. From the 4 hours time frame, we can adjust our order block to the 4-hour order block. So our break of structure is going to be at that level. As we can see, price broke structure and then went back to go and mitigate the order block, which caused the break of structure, where price stepped in 3 times and then pushing down for the 3rd time. And then right now, we have a break of structure here. That is our most recent break of structure. So we have a break of structure, and then we also have a break of structure here. So I'm seeing this second break of structure as liquidity because price did not mitigate the first order block when it broke structure. So we have that break of structure, and then the order block which caused that break of structure from the 4 hours time frame. It is that order block right there. It's that order block right there. And then I'm seeing this equal highs as liquidity that price has to clear. So liquidity is sitting here that price has to clear to go and step into our point of interest, which is that order block. Now heading over to our entry time frame, which is the 1 hour. So from the 1 hour time frame, let's see, this order block has been mitigated. So from the 1 hour time frame, let's study and see which order blocks were not mitigated, because you don't want to be the liquidity. Always make sure as you're analyzing, when price is moving down, it's mitigating order blocks. Otherwise, you will become the liquidity. So from the 1 hour time frame, I can see we have this internal break of structure here. We have that internal break of structure. So we have that internal break of structure, and then the other block which caused that break of structure, from the 4 hours time frame, we are going to position there, because price broke this internal, this internal low, and then this order block was not mitigated. Therefore, all these order blocks that price is creating down here, this is what we call liquidity, because price moves by mitigating the order block. So if that order block is not mitigated, then all these order blocks that price is creating here becomes your liquidity. So all these order blocks that price is creating here, this is liquidity. Therefore, I'm waiting for price to sweep this liquidity to go and tap into that order block, and then we can get a move to the downside. So the overall trend is bias. The overall trend is bearish, and we are looking for selling opportunities. However, we have price at this level. You can take advantage of this buy. So we are going to position for a buy so that we can sell when price gets to that order block, because I can see we are at a support level that price is failing to break. Therefore, if we are to position for a buy on volatility 101S, we have to wait for price to clear this resistance level. So we're going to wait for price to clear this resistance level, and then when we have a candle stick that is closing above this resistance level, and then we can buy and then ride it up to the top to that order block, because eventually we are looking for a buy. We are looking for a sell. Therefore, the buy is just going to be a scalping trade. We are going to buy when price decides to break through this resistance, and then we're going to position for a buy from here until the order block, and then when it gets there, we're going to be looking for opportunities to sell, because the market is bearish. I hope we are clear, traders. That's it from volatility 101S. Moving on to volatility 100. Volatility 100, we can see we have our supply zone right there where price has been pushing. Price has been pushing. And then we can see this is a very good sign. We can see price just broke this supply, this demand zone right here. So we have a break of structure. That is to indicate to me that the sellers are pretty much in control of this market, as we are still breaking structures to the downside. Therefore, that is our break of structure from the weekly time frame. The bias is very clear. We are going to be looking for selling opportunities because sellers are still breaking structures to the downside. That is pretty much it. Heading over to the daily time frame. So from the daily time frame, our break of structure, is going to be at that level. So our break of structure will be at that level. And then the order block, which caused that break of structure, this break of structure, it is that order block. Let me see if it has been mitigated. So this specific order block was mitigated already, so that one is of no use to us. We are going to move to the most recent break of structure, which is that break of structure right there. So we have a break of structure right there. We have a break of structure, and then the order block which caused that specific break of structure, it is that order block. Therefore, we are going to be positioning at that specific order block, since that is the order block with the most recent break of structure. So we have our order block right there. And then we have that order block also. So that one will become now our liquidity. Since price did not mitigate that order block, whatever order blocks price creates below that, our main order block will become our liquidity. So we have a break of structure. We have a break of structure right there. So that's pretty much it from the daily time frame. And then we have our swing low at that point. So moving over to the 4 hours time frame. From the 4 hours, let's see if these order blocks were mitigated as price was moving down. Because if they were not mitigated, then we might be positioning from a liquidity area. So we have that specific order block mitigated. So we have that specific order block mitigated. And then this order block I'm seeing, this order block was not mitigated. Therefore, we are going to be positioning at that order block, because whatever order blocks price creates here, as long as this main order block was not mitigated, will become liquidity. So we have an order block present there. So all these order blocks, I'm going to remove them because I'm seeing them as liquidity, since my main order block was not mitigated. And then heading over to our entry time frame. So our entry time frame from the 1 hour, adjusting our order block, is going to be at this level right there. So all our confluences are intact. We have a general break of structure right there, and then we have an internal break of structure right there. which is where that order block is coming from that internal break of structure. It's coming from that internal break of structure. Therefore, I'm going ahead now to place my sell limit. So this is what I'm expecting to happen for price to sweep the liquidity that is seated there, to go and tap into that order block, and then we can expect a move to the downside because our bias is very, very bearish. So go ahead and place a sell limit on volatility 100 with your entry price at 612.64, with your stop loss at 659.69, and then your take profit level is going to be at 389.84, and it's going to be a swing trade. And be very patient with this trade, and always apply proper risk management. Always apply proper risk management. Now, since this range is very big, if you want to go ahead and enter a buy position here to take advantage of this range, because price is going to take a long time to get to that order block. So if you want to go ahead and enter this buy, you have to wait for price to clear this resistance level here. For price to clear that resistance level, and then you have to pretty much wait for a candle, for a bullish candlestick to close above that resistance level, and then you can enter from here, and then you can pretty much ride that move until that order block, because we are trying to look for a sell, because the overall trend is bearish. However, this range is pretty big. You can take advantage of this buy. So that's pretty much it from volatility 100. Heading over to step index. So step index, if you can minimize your chart and see step index, that it has been very, very bearish from 2020. Therefore, if you are a buyer in this market, you're not going to make a lot of money, because the market is usually bearish. As you can see, price has been forming lower lows and lower highs since 2020. So if you want to make most of your money trading step index, you always have to look for selling positions, and then you only scalp the buys, because the buys do not last, because the overall trend of the step index market is bearish. Now, with that information, as you can see, price is pretty much in a downtrend, so we are forming lower lows and lower highs. However, let me go ahead and mark my key levels. So we have a supply zone right there at that level, and then down here, price, I can see we have formed a new demand zone, and we are pushing from this demand zone, because step index is usually a bearish market. Right now the buyers have stepped in, and we are going to push the price until that supply zone. Therefore, our bias is very clear from the weekly time frame. We are going to be looking for buying opportunities from this demand zone until that supply zone. Heading over to the daily time frame. From the daily time frame, we can see price is pushing from this demand zone. I'm going to start studying the price action from here. So from there, we had a break of structure. So we had a break of structure, and then price reacted at this FVG, because our order block is right there. Price did not get there. However, price reacted from the FVG. If we are looking from the daily time frame, so that one will become our FVG. Our FVG, so price pushed from there. Right now, so we can see we had a break of structure right there. So we have a break of structure, and then price reacted from our order block right there. Price stepped into that order block, and then it's pretty much pushing from that order block. It's pushing from that order block. And then right now, price just broke this resistance level here. So we have a new break of structure. So we have a new break of structure, and then the order block, which caused the break of structure. So I'm seeing that as a general break of structure, and then we also have this internal break of structure right there. We also have that internal break of structure, and then our order block, which caused the internal break of structure, it is that order block. Therefore, we are going to be positioning for a buy at this order block. So that's pretty much it from the daily time frame, heading over to the 4 hours time frame. So from the 4 hours time frame, we have our general break of structure up there, and then we have this internal break of structure. Adjusting our order block to the 4-hour order block. It's going to be at this level. It's going to be at that level. We have our order block at that level, and then all these order blocks that price is leaving here, this is what we call liquidity, because our main order block here has not been mitigated. And then I can see price is still pushing up. It has not yet given us a swing high. Therefore, for this trade, we just have to wait for price to give us a swing high. But let's keep on breaking down, heading over to our entry time frame, which is the 2-hour time frame. Let's see if we can adjust. Our break of structure. Let me start studying the price action from here, where price broke this high. So our order block is going to be at that level. So we are going to be positioning at this order block. We always position for the order block at this first internal break of structure, because all these order blocks that price creates as it's moving up. As long as it did not mitigate our first order block, then that is liquidity. So that is liquidity. Since price is still pushing up, I'm not going to give coordinates for the buy limit because I don't know how far price is willing to push up. I just need for price to give me a clear swing high, but we are waiting for price to sweep the liquidity that is seated here at these unmitigated order blocks, and then for price to come in, tap into this order block, and then we can expect a move to the upside. So the coordinates for the buy limit, I'm just going to give the entry price and the stop loss, not take profit because price did not yet form a clear high. So go ahead and place a buy limit on step index with your entry price at 7960.1 with your stop loss at 7922.0, and always apply proper risk management. All right, traders, that's it for this episode. If you did find the analysis helpful, please consider subscribing to the channel, like the episode, and share it with your friends and family, those who are interested in trading. And happy trading. Have a profitable trading week, and see you next week.